Hi guys, today we will discuss how to trade candlestick on chart. Now we will be trading the stock AK Steel Holding and see how our trade goes. We will be just picking patterns. As you can see, the chart doesn't hold anything. It is absolutely empty. Just look at it. There is nothing extraordinary in it. Just the volume. We can even remove the volume. Now, this is the start of 2016. Now just look at it. Now what do you see right here? It's an engulfing bull. Let me zoom in for you. Right here. It's an engulfing bull. Now how can I say it's an engulfing bull? It looks to be opening lower and going even further lower. But you should not be looking at it like that. Because basically when I'm teaching you the patterns, I'm teaching you how it will be like done. But not how to like read it. Right now I'm teaching you how to read it. Now, if normal circumstances, it would have opened right here and went down. Now it opened lower and went down, but basically this red candle ate this green candle. So all the gains right here were completely wiped out in this red candle. So it means a downward trend, right? Now, this means that if you are bullish, then it's not so much great strategy to remain bullish. Now it again opens lower right here, but didn't went lower. If you look at it, it opened higher and went lower. If I look at it right here, the close was $2.33. Right here it opened at $2.40, made a high of $2.47, and then like dropped, made a low of $2.31, but then came back up and closed at $2.33. Now if you look only at these two candles, what do you see? You see tweezer bottom pattern, which means a minor reversal signal. But for that reversal, you need another day candle to confirm what really happened. It opened at 233 and dropped. So that's what I am trying to teach you. That once it says minor reversal means you need another candle to confirm that it is going up or not. You cannot jump in to buy. If you look at it, once this candle ate it, I told you that if you're bullish, now the bullish is gone. And that's exactly what happened. From $2.33, it went down to $2.06. Just look at it further. Then it opens up from $2.06, it opens up to $2.13 and closes at $2.18. Now these two candles represent bullish harami, which means that if it happens on the downtrend, then it's a bullish mark. So it's telling us that from tomorrow onward, it will be bullish. Now let's look at it. It went lower, then again made a candle and went lower. Now, number one rule, we were thinking here as on the terms of bullish. But if you look at this red candle, it ate whatever it made and ate it completely. So this is the two like major things that I am trying to teach you. You'll see a pattern, but after that pattern, whatever your assumption is, the market should follow that. You should not be like sitting on the sidelines or like buying it up and sleeping it off. You'll be considering pattern on pattern, not in isolation. If you look at it, this was an engulfing bearish candle. It ate whatever this green candle offered and it went lower. Lower. Then it made this, a hammer. A hammer means a bullish candle, but we'll be waiting for the next day. I will be selling, 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 selling. And people will be buying, not understanding that this is a trap. And all those people who will be buying in this high, till this high, will be like getting stuck in a trap. The people who will be buying on this open and selling on this high may be like fortunate enough, but others will get stuck. Just look at it further. Next day it opened higher at $2.22, closed at $2.20. Again, this close was 221, this close is even further lower. Not a good mark, but the lows are starting to get up. Highs are starting to increase. This is a good sign. But the next day it again opens lower, close lower, and the low is even further lower. Not a good sign. Now we have sold it. Third day it opens at $2.19 and closes at $2.30. Now this is an important day again. Now how do I consider it important? Because this day ate these two candles. This day is same like this day. We bought it on this day. Why? Because it ate these two red candles. This is the same day. It ate two red candles. So we'll be buying at $2.30. Next day it opens higher. Right here it is $2.37. Closes $2.39. But don't look at the body. Look at from where you bought it, $2.30. It's 10-cent profit. Boom. It went from $2.44 till $2.57. Don't look at $2.57. Look at where you bought, $2.30. That's a 30-cent profit. That's huge. That's 15% profit for you. Next day it opens higher, but close lower. But still, it is like in a profitable strategy. No problem. Next day it opens at 256 and closes at 252. But this candle hasn't eaten more than half, so it's not that bad. Because if it would have eaten more than half, then you would have been concerned. But wait. Boom! It opened higher, 258, closed 266. Let's check next day. Next day it opens lower at $2.63, closed at $2.68. Not bad. The closing is getting higher. The highs are getting higher. The lows are getting higher. If you just look at it, this low was 219, this was 227, this was 242, and this was 245, this was 247. So the lows keep on getting higher, which makes us in a bull run. But then it breaks the low. This low is broken, this low is broken, but this is not. Wait. We will wait. The next day it comes up with a red candle. $2.66 open, $2.56 close. But the main point is not this. Main point is this red candle has eaten this green candle. Bad. Extremely bad. So we bought it at 230. We'll be selling at 256. 26-cent profit, which is 10% profit. Huge. Now I know some of you might be thinking 26 cents is not a good profit. I totally agree with you. But what I am trying to do is I'm trying to teach you the trading. Once I will move from like a good stock, from this is a penny stock. So in a penny stock, the profit will be like far lower in cents. But once I will move to a good stock, you'll see the profit like multiply. My point is you should be in profit rather than in loss. Now right here, it is telling you get out. This is not a good move. This red candle is a bad move. Engulfing bearish candle. It has eaten this red candle, this green candle, and this green candle. Bad move. Next day, it opens higher. Now this is the thing I wanted to tell you again. Now in a candlestick trading, you're not trading for the long run. You're trading for the short run. Candlestick trading is designed to make you money in a short run. Now once you sold it here, the next day it opened higher at 265 and closed at 274. This candle again ate this red candle. Which means it's again a buy signal. $2.74 we bought it. Boom, boom, boom. It went higher. So basically it went from 274 till 357. That's what, 80 cents, 33%, huge gain. Now my point of view is understanding the trade. It's not about how to trade. Now one more day and it touched $4. Huge and still bullish. Now what am I trying to teach you? Let me show you. Where is it? Number one. Come on. Yeah. This was our first buy. Number two. This was our sell. Then this was our buy. Then wait a minute. This was our sell. Then this was our buy. And it is currently going up. Now my point of view is, now this is a thing that happened, got you sold. But once on the next day you see it rising, right at the end of the day, the closing period, at the end 15 minutes, just look at the candle and you will understand that you are in profit. And it is trying to eat everything, this red candle. Buy it right here at $2.74. And it's a good money, easy money. Now if you look at it, for this 10%, 1, 2, 3, 4, 5, 6, 7 or 8 days trading, we only needed 8 days trading to make a 10% profit. Now I will just ask you, who makes profit of 10% in a week? No one. And candlesticks are easy. I'm not telling you some of like rocket science. It's just simple trading. As simple as that. Now just look at it further. It opens higher, 376, closed 374. I mean $3.74. Usually I don't count that point because I believe you should have a simple marking rather than calculating it like that. So my point is, don't believe it's a red candle. It's a green candle because it's higher. Now this red candle is like is made to confuse you, but it's not. Be bullish. It's not bearish. Next day it opened higher at $3.97, closed at $4.04. You're still bullish. There is no problem. What's the problem? Just look at it further. Now that's what I call a problematic candle. It opens at $3.95 and closed at $3.62. Bad. Why? Because this red candle ate this green candle and somewhat this low is 360, this low is $3.59. So it's broken this low. Now this is where I will tell you, get out. Let's put the mark. Here we go. Now we have sold it. Let's see further. It opens next day a bit higher, $3.71, and closed at $3.69, but with a long low and a long high. So it's like a doji candle. Doji candle means confusion. And then it makes a green candle. A good green candle. $3.55, $4.15. I will call it a buy signal. Right here. Now basically what I'm trying to tell you is, just look at it from the way you started buying. You're making money on each and every point. Right? Now on this day you got confused, but right here it's telling you to buy it again. Now I know you might be thinking, okay, we are losing few cents by selling here and buying here. But that's what candlestick trading is. It will make sure that you lose few cents, but it will give you a good buying orders. It will not give you like flappy orders. Now right here, it opened higher, closed lower, opened lower, closed higher. It's going straight. Again, lower. Now again, green candle. Now what do you see right here? It's a bullish 3-day candle. Now if you remember that lecture, I told you it could be 3 red candles. But this kind of a green candle can also come in. But don't fall into the trap. Basically what happens is these three candles never break this low, never break this open. That's what happened. And this fourth candle eats part of these three candles. And it did. Right here. $3.75. Closed $4.07. Next day it opened higher. Third day it opened again higher. And the fourth day it's again higher. Fifth day again higher. But right here, problem. It's telling you, get out. It's $4.33 open and $4.08 close. But it has eaten these two green candles. So it's a sell signal. Right here. It's get out. And you have sold it. And if I just zoom out, these are your trade. 1 trade, 2 trade, 3 trade, 4 trades. Point is, it's always telling you the exact picture. No problems at all. It may be telling you to get out early, but that's how it's formed. If you want to eat everything, then move to the weekly level. Don't trade the daily level. But that's how it is. It's simple. I'm not telling you anything of a rocket science. Just simple techniques. Thank you.